All right. As I've said previously, my name is Reginald. I'm with the Arizona Department of Housing. We will be covering the relaunch of the P2P, or Pathway to Purchase Down Payment Assistance Program. This presentation will be recorded and posted on our program site page for your viewing at will later. Therefore, anyone who's not able to make this presentation can make up for it at their leisure just by watching it. But we do encourage every participant, whether you're the originator, the processor, an underwriter, to take in this information, because it will answer most of, if not all of, your questions regarding the program, and it will prevent what we all want to avoid, and that is a transaction going awry and costing the consumer a property or money or time that they didn't anticipate, and putting us in a position of not really being able to do anything about it to remedy it because a procedure or a protocol or a policy was not adhered to, right? But listening to this presentation will position you so that hopefully that doesn't occur. What you see on the screen now is the Arizona Department of Housing's homepage, and you've seen this before. Hopefully on our homepage, we have our home buyer assistance program information here. We will, by the end of the day, incorporate the link for the Pathway to Purchase program here below the Home Plus Down Payment Assistance program, and incorporate the language there regarding the relaunch of that program. I am fairly confident that the vast majority of you have participated in this program previously and are very familiar with the process and the program. So we will emphasize the differences between this relaunch and previous launches, and we will still emphasize major steps or missteps that are common, so that hopefully we, kind of reinforce in your mind what to be mindful of as you go through the process and seek to deliver this assistance for consumers. The program is projected to be in place for a 90-day period of time: April, May, and June. So your submissions for a down payment assistance reservation issued in the month of April, for example, which is where we will begin, will come with a 45-day approval. And so you have 45 days to facilitate that transaction and redeem that certificate toward the purchase of the property. We'll get into the process of making that request, and it is essential that you do that properly, because without a reservation, you have no guarantee of assistance. So with that in mind, I'm going to bring up on my screen, if you will, the illustrative portion of our job aid that will communicate to you how to go through the process. There is a narrative, it's just the language, and then there's this illustrative one which gives you the pictures, which we think is hopeful, right? And so again, from the website at the department's landing page, you will see where you log in. Every lender who participated previously has a login credential that's already been established with the program. However, all lender login credentials have been deactivated. They will be reactivated as a part of your submission of your current lender participation addendum. Therefore, if you had a credential and you think you still know it and that information was right, but yet it doesn't work because we've deactivated it. But that information will be accurate. At the time that you submit the required addendum, that information gets reviewed and cataloged. Your credential will be reactivated, and you will receive an activation email that will give you an opportunity to set your new password. It'll give you a temporary password. You'll use that to log in, and then you'll set your regular password and be able to go from there. So you'll come here as before and do your login. And of course, in the event that you need to change your password or you forget your password in the future, and or your username, you can click that, I forgot my username or I forgot my password, and it will send that information along to you. I want to mention this messaging here to you as a reminder. Each time you log in as a participating lender, there is a message that will be there that will communicate to you the amount of funds remaining available for that month. This gives you a sense of, right, the likelihood that your submission will receive consideration and approval based on how much funding is available and how it's kind of been tracking through the month. When the allocation for the month has been fully expended, this messaging will communicate that to you, and there you won't be allowed to submit, excuse me, until the next month's allocation is issued. You may recall previously we had a monthly allocation of 1.5 million. This time around, we will have a monthly allocation of 2 million. So we got a total of $6 million for the 90-day relaunch of the Pathway to Purchase program. This is round 3 or launch 3, and we believe the final launch, given the fact that our ability under our agreement with the U.S. Department of Treasury that provided the funding for the program does not allow us to issue any additional commitments after June 30, which is why the timeline is April, May, and June. But it is, again, $2 million a month for the allocation. If we have an opportunity to increase that allocation any between the start and the termination of the program, we will do it. But ultimately, take note of this messaging each time that you log in, because it will communicate to you what's available for that given month. And it will say when the close of escrow needs to be on that transaction in order for it to be eligible within that given month. Cool. Once you log into the portal, you will then see this, and this is important, we've talked about that before, is where you import your consumer information, right? Because we designed the system so that you can import your 3.2 format file into the system and not have to retype the data into the system. So you just go import right here, and it'll open up this dialog box for you, and then you'll choose the file that you want to import, and then it will upload that file and create a case for you. And this is what we refer to as the case ID number. On that case is picking up all of your transaction information. So before you import your file into this system, you want to make sure that it's reflective of what you expect the final transaction to be. It should be the file, right, that you've used to get your LP finding approval, which would then reflect who your buyers are and what their income is and your purchase price and the property and so on and so forth, right? So this is not a to be determined kind of transaction. You must have a purchase and sell agreement fully executed in order to make a request of a reservation, and then that information should be part of your LP findings, which would be part of the 3.2 format file that you're going to upload into the system in order to begin the process of making the reservation request. I'm going to pause for a moment here and check with David to see if we have any questions that we need to address at this time before we continue. Good. All right. It looks as if, based on the questions everybody's following, we've addressed what we've had there. LP only, can we use DU and FHA? I saw that. No. Let me just pause based on having seen that question and make this major change statement regarding the program. There are two major changes to this relaunch. Capture them, make sure you remember them, and share them. The first one is the only allowable underlying first mortgage product to be combined with this down payment assistance program is the Freddie Mac HFA Advantage 80% of area median income and below product. That's a significant change, so make sure you get it. The income limit, which you were probably accustomed to being something a little north of $100,000 previously, is no longer the allowable income limit for this launch. It is 80% of area median income and below only. The primary purpose for this targeted change is, in order to be able to do this third round, if you will, we had to ensure that we were focusing on people adversely impacted economically. Initially, you may recall, this was as a result of the financial crisis, and this third round is is, if you will, really being in support of the adverse impact of the COVID crisis in regards to the economy. So Freddie Mac, HFA Advantage, 80% AMI and below is the first mortgage product. So the income cap for any consumer utilizing this program is 80% and below. The second major change, and we would have gotten to that, but I'm going to just lay it out here for you now. So these are your two major changes, is the down payment assistance reservation request process change. Historically, and you will see this, we'll show you the forms that you're required to submit in order to make that request. Historically, you had to submit your income calculation sheets so that we could determine what you've calculated the income to be by that sheet. We will now require that you provide the supporting income documentation as well, pay stubs, W-2s, tax returns, depending on what you've used to calculate that income. That change obviously is correlated to the 80% of area median income and below change. We want to ensure that procedurally we do all that we can to protect you, us, and the consumer from any missteps regarding that eligible income limit and have someone get to the end of a program process thinking they qualify only to discover they don't. And so with the 80% AMI and below change, we're changing that when you make the request, you have to provide the supporting income documentation so that we can do an analysis in addition to the analysis that you do, not an analysis for you, but an analysis in addition to the analysis that you do to ensure that the income does not exceed the limit and that the reservation certificate that is issued is able to be redeemed based upon the consumer's qualifications. Cool. All right, so now I'm going to proceed on. As you see, we said you would import your Fannie Mae 3.2 file. It will automatically populate the data into the system, and you see the red highlights and the arrows pointing the information that we provide you in order to direct your attention to the major aspects of the process that you have to ensure that you get, right? And so there is the doc data tab, and on the doc data tab, you want to enter the information for that specific transaction, and you see that the P2P closing documents are valid for the month in which they are dated. And we could have put an only on there, right? But if the docs are dated for the month of April, whether it's dated April 1st or April 15th, they're only good for the month of April, while the certificate for the DPA reservation is good for 45 days. Therefore, that means you could get a certificate in April, you could get loan docs dated in April, let's just say late April, April 20th, April 22nd. But if your transaction doesn't close until May 5th, you will need to request new closing documents that would be dated May in order to properly complete that transaction. You cannot use those existing closing documents. And in a similar fashion, documents may be signed as of the date they are dated or thereafter within the same month, not valid if signed prior to the date on the documents. It's like a post-dated check. You're probably all familiar with the process, maybe some not. As a matter of fact, thinking about the generational thing, younger people going, check, what are you talking about, check? I just use Zelle. But if you write checks, it is technically illegal to post date a check because that's a promise of the future, which you can't make. And that's the idea behind the loan documents. If they're dated for April the 20th, you can't sign them on April the 18th and have them be valid. They need to be signed on the 20th of April or thereafter within the month of April. If it goes into the month of May, you would need to request new loan documents. We obviously look at the projected closing date in order to anticipate that as we prepare the documents, but sometimes not all things go according to plan, and so we share that information with you there.
There will be no April docs.
And David was just saying he didn't think there'd be any April docs. I don't know, right? And here's the real deal, because if you have a transaction in process, and many of you are closing transactions within 30 days now, if you make a tweak to a transaction that's already in process, you might make a reservation and close it within April, but we'll see. Whatever happens. All right, so now what you see here is, again, more of the information that you need to enter into the system on that doc data tab to ensure that you generate the required documents in order to facilitate the transaction, as well as provide the necessary information in order for us to complete your closing documents. And everything, again, is highlighted. If there's a recording fee that's being charged for the DPA second, that is the only allowable fee on the DPA second. All other fees have to be charged to and in regards to the first mortgage. The only allowable fee in relationship to the DPA second is the recording fee, and that fee should be noted here in the system because it will be reflected on the till that is generated in support of the DPA second. And I know I may have thrown some of you, depending on when you've entered the industry, like a till. What is a till? TIL stands for Truth in Lending. And after the change, and so you get the TRID, which was the integration of RESPA and TIL, if you will, you as a lender, for the most part, don't use that on your first mortgage. You have your closing estimate, which is fine. However, for our DPA second, there is still a TIL. And if there's a recording fee in relationship to that DPA second, it should be noted here, and then it will capture that information there. And then ultimately, you see here, you're going to generate, if you will, your declaration of eligibility for the transaction. This is where you get your forms that the consumer will need to sign in order for you to submit a request for a reservation. And you see it clearly highlighted. DPA declaration of eligibility, generate the documents. You'll generate those documents, you'll print them off, the consumer will be able to sign those documents, and you will be able to submit them for that request. Take note, all of this information will be posted on our website. That includes the recording of this presentation, and the information in terms of the step-by-step aligns with the narrative and the illustrative, step 1, step 2. It was all of step 1 that we were just covering there. Again, the remaining steps won't take as long, so don't think we're going to be forever in covering this, but I want to ensure that you know the steps and that you meticulously cover the steps, because to have a misstep will cause a failure. All right, so then you're in there, right, and you've created the reservation documents, and so then you've uploaded the information. All of this is showing you that, as I covered with you, when you're getting to the site in terms of entering your title company information, which is really important. And so you see your signing date for the transaction. And keep in mind, that signing date or effective date ties right back to what I was sharing with you earlier regarding the effective date of the docs, not the funding date of the transaction. Right? Oftentimes people will think, well, my effective date is the date it's going to fund. No, we realize it may fund 48, 24, 72 hours post signing, but the date you want on the documents is the date you expect the transaction to sign, not fund. So remember that. And generally, that's why if you're at the beginning of a month, whether it's April or May, you want your docs for the first of the month, which will allow you to sign them as soon as possible and take them as long as possible through the month. In the event that you run out of month before you close your transaction, then you know you need to request new closing documents in order to complete your transaction. Again, giving you all the information here, the case number, which will come straight from the system, the title company information, email address, phone numbers. That helps us in the event that we have some communications matters to address with the title company. Then we have accurate information of who to contact, where to contact, how to contact them, and you're generating all of this information based on your initial transaction, right? And then just translating it to our system in order to generate those closing documents. Here you see that, again, kind of in that numbering, the second mortgage fund request executed by the lender, the declaration of eligibility executed by the home buyer. So those documents have to be signed by you. We do not allow electronic signatures on our documents because we do not have a means of verifying the electronic signatures. If you have a system by which you transmit documents to a consumer electronically and validate that signature, we will accept that, because then you are responsible for the validity of that signature, not us. The household composition sheet, which just tells us what the makeup of the household is, the Dodd-Frank certificate executed by the home buyer, the third-party authorization executed by the home buyer, the truth in lending statement, which I've mentioned to you once executed by the home buyer. And remember your home buyer education certificate. That is required on the down payment assistance program. And again, that aligns with the first mortgage. So whichever IDA, whether it's the Tucson PEMA IDA that you're working with or the Arizona IDA that you're working with, however they allow that home buyer education to be completed, you may complete it. And if they require it for both borrowers when you have two versus one when you have two, whatever that process is, we follow step with that. Because one of the things I want to stress to you here is it is two transactions. The first mortgage is subject to all the terms and conditions of the first mortgage product, which is the Freddie Mac HFA 80% and below AMI product, and the first mortgage investor that you know you're going to sell that loan to. So if they have some overlays, you want to honor all of that. The second mortgage, that DPA, if you will, we are the investor on, and so we have no overlays that we won't cover here for the most part that do not align with the first mortgage product, but we obviously have some documentation and procedural differences that we're covering here in terms of the truth in lending statement that you want to ensure that you adhere to in order to be able to properly satisfy both transactions. You see loan prospector certificate or the AUS finding. It is important that your transaction properly reflects what you're doing. And you may or may not be familiar with the fact that depending on your LTV, CLTV in loan prospector, sometimes you need to enter a soft second or DPA as a grant, which may not properly reflect the CLTV versus entering it as a second mortgage, which will impact the CLTV. We accept that in both fashions, understanding that loan prospector has that limitation, right? But you want to ensure that it is properly completed, that it reflects the grant if it's reflected as a grant, or it reflects the second mortgage if it's reflected as a second mortgage, so that we know the findings properly reflect the transaction. HFA Advantage 80% and below AMI first mortgage product, that will populate the income limits, which are based on the county on the transaction, and it will reflect the DPA assistance. So critical that you look at this information, ensure that you're properly completing it. As I mentioned to you previously, the underwriter qualifying income calculation worksheets, that sheet does not have to be completed by the underwriter, because we understand procedurally sometimes the transaction may or may not have gone through your complete underwriting process, but it does have to be completed by whomever is calculating the income in order to determine the consumer's eligibility, not just from an AMI, area median income perspective, but also from a DTI, debt to income perspective, in terms of what they're entering in the system. And they are required to provide the supporting income documentation, pay stubs, W-2s, etc., when you submit it to the Department of Housing in order to request that reservation. And I'll just cover these last two things, and then we'll pause again and make sure that we cover any questions that are coming in. Execute a copy of the sales contract and all addendums. Critical, right? I said this, in order to make a reservation request, the consumer must have a fully accepted purchase and sale agreement. So you can't have a to be determined, and you want to ensure all addendums applicable to the transactions included with the submission, because the first thing that we do when we're evaluating the sales agreement is to look at the number of pages for the standard sales agreement, ensure that we have all of those, and then to begin to look at the addendums, accounting for the numbers of all the addendums, ensuring that we have all of those. If we don't have all of those, the transaction will be rejected. And so then update the transaction status to send it to ADOH, and we'll talk about that. But all of this is about the submission, ensuring that one, you've properly created the reservation case, two, that you properly generated the reservation documentation, and now three, that you properly upload that documentation into our portal. And so you see the upload information here. You just click and upload. It will give you, you'll select the area, the TIL, the consent form, the household composition sheet that you want to select and upload, and then it will upload it. When you see this blue and white document, that is your uploaded document. Just the plain white tab, if you will, is the template document. So don't look at the white tab thinking all of my documents are there. You need to be looking here where the arrow is that indicates your uploaded document is there. And you can ultimately even download that uploaded information in order to view it, because you want to make sure that it is legible and properly displayed. Otherwise, you would want to do another upload. As you do that, right? So now you get it all uploaded and you review that information. Then you're in a position to where you want to submit the request. And in order to submit the request, when we're at step 5, right, you're going to the update right here, and you see it from the box, and you're going to select the status, and there's simply one, but you have to select send to 8008, and then you will save that, and it will send that request for that DPA reservation to 8008, and that will get you through that phase of the process. Let me pause to see if there's a question out there. We had a question regarding the eligible income limit and restriction, and this is really interesting, right? We don't drive it programmatically. I want to be clear on that. It's driven by the underlying first. And that's not necessarily exclusively the IDA, though I always suggest that you check with them, because, right, you got to get them to acquire or purchase that first mortgage just as much as you got to get us to fund that second mortgage. And it is our understanding that it is the borrower's income that's being evaluated for the AMI. But I don't want to be on record as saying that's not a problem. So I'm going to defer to the IDA, who I'm sure will defer to Freddie Mac. And it is somewhat ambiguous there, in my opinion, but I leave that to them in terms of the eligible income. In terms of the target area, and we would get to that, there's no change from the previous round. So there's 26 zip codes, and we'll cover that area, and that is posted there. Let me get back to just this last portion, and then I'll take another pause and kind of transition, showing this information and sharing some other information with you. But right, remember, once you make your reservation, you submit your documentation, that's great, and you're here. But after this transaction is completed and closed, you still have a responsibility to upload to our portal the collateral file, if you will, or the credit package, depending on how you refer to it. And that is the same credit package that you have to send to the underlying first, right? US Bank, ultimately, whether you're working with the AZIDA, and I think Hilltop is they're in between people, or if you're working with the Tucson Pima IDA and eHousing is their people, but you're uploading that credit file so that they have everything. And we require an identical copy of that package. And you just simply upload that same package. We don't ask for anything any different in terms of order or documentation, but you do have to place that package here at the end of your process in order to ensure that you've completed everything properly on that transaction. Now, with that in mind, I'm going to mention two major goals, right? So I gave you two major changes. One was the underlying first mortgage product. It is the Freddie Mac HFA Advantage, 80% area median income and below. That's major. Second is the DPA reservation procedural change. That is that you have to provide the supporting income docs with your income calculation sheet at the time of the request of a reservation in order for us to do a secondary look on that. Two major changes. Two major goals. Right before, we've always had a targeted area, and the targeted area has been predicated on areas that had not recovered at the same rate that the entire state had. And so we looked at those underlying areas, and given the effect of the pandemic on the economy, we anticipated there wasn't much change there this time, so we didn't really want to go back out and have to do that, and time was of the essence. And so that was a part of why the 80% of area median income and below was brought into play as we interacted with Treasury to get approval to relaunch the program and have the target areas, it was like, okay, this will affect low-income households. And we know all households have been affected economically, but it will concentrate the assistance on what is deemed to be a higher priority. And so that's why it's the same zip code areas, and the applicant's income, if you will, was concentrated on a reduction there. Those are the two major goals, the area and the applicant. Two major objectives, and these are your takeaways that you got to ensure that you do. And that is, one, that you complete your addendum for your participating IDA so that you can participate, and then you will return that to the program. That's the P2P inbox where you submit that, and that will be posted on our website as well. And then that will get you your login credential. Because remember, you can't submit a transaction until you get a credential, and you can't get a credential until you've completed your addendum. I do want to tell you that the addendum for the Tucson PEMA IDA has been approved and is ready for us now to share. So when we launch the site later today, that will be there. The addendum for the Arizona IDA has not yet been finalized, but we anticipate having that in the next day or two. At the outset, a week from today, I think, as I mentioned, as soon as we have that, we will post that there. So if you're a participant with the AZ IDA and you want that addendum to be sent to you, email the P2P inbox so that we'll send out a communication as soon as we get that form approved and posted. But that communication will also have the form for you so that we'll make sure and get it into your hands as soon as possible and into the hands of the right party, because we want you to have that. All right, let me pause here just to make sure. I want to switch the information displayed on the screen here and just kind of share with you, if you will, the reservation request checklist, right? I told you I was going to tell you what I was going to tell you, then I was going to tell you, and then I'm going to tell you what I told you. We're getting into that second phase of that, right? This is just the narrative, but you can look at that, and the question would be, is the doc data tab properly completed? Right, and I showed you on the job aid the red illustrations that would highlight the areas that you'd have to focus on, that it has sample data in it, right? So you have a sense of what that data should look like. Number two is the funds request form completed and signed and dated. And remember, no electronic signatures authorized. Can't be, it should be said, handwritten by the lender. And the reason that data cannot be handwritten is because if you handwrite it, that tells us instantly you did not properly populate the data in the system. And the data in the system transfers to our loan documents. And so it's critical that the system contains not just data, but the proper data so that the documents will be properly generated at the time that they're needed. And as I said to you, because we don't have a means of verifying electronic signatures, this form cannot be electronically signed. The forms that you send to the consumer in support of the program, we're going to get into that, can have an electronic signature if you have a means of delivering them and receiving them that accommodates that, because then you are validating the authenticity of that signature on those documents. That is the declaration of eligibility, complete, signed, and dated by the consumer. The household composition declaration, complete, signed, dated by the consumer. The Dodd-Frank certification, completed, signed by the consumer. The third-party authorization, completed and signed by the consumer. Remember, that's going to allow you, the lender, to speak with us freely about their information. Obviously, it allows us to speak with you and to speak with them and the title company. And most importantly, it enables you to give us that credit file at the end of the process that we were talking about, right? It even goes on to the transfer, because it is a standard Fannie Freddie third-party authorization that as a loan is transferred, that third-party authorization transfers with that servicing rights. So that's critical there. The truth in lending statement that I mentioned, remember, the only allowable fee on the DPA second is a recording fee. And if that recording fee is going to be charged, it should be reflected on the truth in lending statement that is applicable only to the DPA second. the home buyer education certificate. If it has a place for a signature, it needs a signature. If it does not have a place for a signature, it does not need a signature. I remember historically people just sign them in general random places, and that's fine, but only know if there's no signature line, there's not a problem. But if there is a space for the consumer to sign it, then they need to sign it. And as I mentioned, your AUS findings must be complete and dated. And when we say sign and dated, right? And that is by whomever is saying, I input this data, because right, there's no tracking of that, of who's saying, yeah, this is what I input on that data. And then the underwriting qualifying income calculation. And I know that first underwriting qualifying income calculation historically had people thinking it had to be done by an underwriter or the underwriter's qualifying income calculation, but it could be the LO, it could be a processor, whoever is calculating the income that is going to be used to complete the transaction, right, needs to sign and date that form and provide the supporting income documentation that was used in order to arrive at that calculated income. That's that one change. And then I mentioned the executed copy of the sales contract, all addendums signed and dated, and we actually check for that. It's critical. So all pages of the standard agreement, and if that we have all addendums, and then check your data tab to ensure that all the information in there is accurately completed. And you see here, as I even said, click the download all uploaded forms and make certain the documents is viewable and all the uploaded documents are in the package with no errors in the pages. Critical, right? Because when you make a submission at the beginning of the month for a reservation, trust me, there are tons of those requests coming in behind yours, and we do not allow a lender an opportunity to make a correction to an incorrectly submitted request in order to hold the place. We reject the request, we disclose or identify the error, and you have an opportunity to correct it and get back in line, but the chances are fairly slim in terms of you getting a second look within the same month in order to receive assistance. So you want to ensure that you look at these 13 steps, and don't forget this last one, because we've had people do that, and that is update the transaction status. That is to send the request to ADOH for review. And then that will get you just where you need to be. I'm going to pause, make sure we're not missing any other questions that you may have. Yeah, a couple things regarding the transaction specific. Keep this in mind, and I think you know this. I like to say, you know, what makes a transaction is a borrower, a property, and the supporting docs for the two. That is the borrower and the property. So if the borrower changes, the reservation can't be transferred to somebody else. You need to make a new request. And that could even be a husband and a wife, or two, you know, people buying together and then one dropping off, right? We allow you to go down because one person can hold the certificate, but you can't go up. If you're going to add someone to it, now you're changing the transaction materially, and that's a secondary request. The same thing is true with a property. If you know, right, you have the property, you make the request on that, but then they find another property, and for whatever reason, you want to change properties. Now that's a new request. You can't transfer that existing assistance reservation certificate to add a borrower or to change a property. And obviously then if the income documentation or the appraisal is for a different property, same thing, it has to be supported by the supporting documents. But sometimes people will throw you, oh, it's just a minor change. No, those are the three major components to every transaction. And when one of those three things changes, your transactions change. And when your transactions change, you have to make a request for a new certificate. Remember, this product is for owner occupied only, so you can't have non-occupant co-borrowers. I think that's fairly understandable. But remember, if you have non-borrowing spouses or partners or other applicants and they have income and you're trying to determine whether or not that household income affects the transaction, we're deferring to your IDA. So go back to your IDA to get confirmation of that. We will be looking at the income documentation based upon the calculation worksheet, the supporting docs, and the information entered in the AUS findings. So that gives us a borrower-focused analysis. But in terms of the overall product, remember, go to your underlying IDA. Cool. So that covers those 13 steps there, which is identical to the information that we covered here illustratively. So just want to take a moment now, if you will, and jump over to where it was, the form. So I want to show you the forms that are generated by the system as a result of the data that you complete in the system that you want to look at to ensure is complete so that you get it right? So the consumer information, if there's two consumers, two applicants on your transaction and only one of their name is showing up here, that's a problem. There needs to be a phone number for that applicant and an email address for that applicant, right? And that's the data that you're entering into our system. So that's what's being populated on the forms. If you don't see it on the form, that's a clear sign it's not in the system. This, we point out to you, if the county does not populate with the 3.2 file, we will have to edit the property tab in the system to select the county. But you want to ensure that you're showing your county properly on your forms, because as I mentioned previously, the area median income can vary based on the county. If you're in Pima County, you're going to get a lesser income than if you're in Maricopa County. And we don't make that determination. That's HUD, just for the record, but know that it affects the eligible income at 80% AMI below. And therefore, you want to ensure not only are you reflecting the county, but that it is the proper county, because it has ramifications beyond the location of the property. The similar thing on the household members, right? That's picking up the number of borrowers. It's not picking up dependents. And that goes back to how many borrowers' income should I be looking at? Should I be seeing clearly that the second borrower has no income so that it's not questionable? And that's critical, right? Because I like to say silence does not constitute acceptance. And just because it's blank doesn't mean it doesn't exist. So if you have two borrowers, and one you clearly document their income and their job, and you have a second borrower, but you don't say NA or non-working or not employed outside the home, or however else you try to or desire to reflect that this person has no income, you need to document in terms of the application, this person has no income. Otherwise, it leaves it ambiguous, and we have to guard against fraud, waste, and abuse as well. And so if it's questionable, if it's ambiguous, then we have to come back and say, now you got to confirm. And if we come back to say, now you got to confirm, that means your initial request is being rejected. And if your initial request is being rejected, that means you're losing your place in line. And if you lose your place in line, that probably means you lose your shot at a reservation that month. So it's critical, right? The devil is in the detail. I know you know that. Make sure you get it right. When you come down here on the property information, right, it's saying what the purchase price is, and the system will calculate that 10% up to $20,000 max, because it is 10% of the purchase price. But remember, if the purchase price is greater than the fair market value, that 10% is based on the lesser of those two numbers, still capped at $20,000. And then there are the statements that the consumer is making, the declaration when they sign this, that the property will be a primary residence, that the property is in an eligible city according to the program information, right? Having them see it. But there is a blank here that the consumer needs to complete. And this is our wanting to ensure everyone's accountable for their part in the process. My lender has verified that my income is not greater than 80% of AMI, which is, and so then they're writing in the AMI number, not their income. That's where the county becomes critical, right? So you're saying if the AMI number is 54,000 hypothetically, then I'm saying my lender has verified that my income is not greater than 80% of AMI, which is 54,000. My income might be 34,000 or 44,000, but I'm just saying, I know my income is not greater than this. Remember, this is a declaration of eligibility that the consumer is making based upon the information they're sharing with you and you are sharing with them. That's why they're giving you the data, you're completing the form, and then you're reviewing it with them, and then they're signing it because they're saying, okay, here's my declaration of eligibility, my household composition declaration, my Dodd-Frank certification, my third-party authorization. Another critical piece here, we have not, which is the key part, or have previously received Save Our Home AZ assistance. Consumers who have received DPA from us before, or who have received foreclosure prevention assistance from us before under this program, are not eligible for subsequent requests. And believe you me, the system will pick up on it because we retain their data. So you want to make sure, if you know you've previously assisted a customer under this program and they bought a house, that's great, and they sold the house, that's great, and the lien was forgiven, and that's great, and they made a ton of money, and that's great, they can't come back to the well a second time. That's not great. And so, right, there's the penalty of perjury information, just stressing everybody, don't just sign what you haven't reviewed, don't just sign what you don't comprehend, make sure you review, make sure you comprehend, and then you sign and date. And this is the household composition sheet. And again, it will pick up the data from the applicants in the system. Additional household members are added there. And again, they're indicating that they have or have not previously received assistance from the program. And this is another spot where when you have that co-borrower and there's no income, that you can clearly indicate 0 or no. And now we don't have to guess as to whether or not you failed to include some income that should have been included. When it comes to other properties, key point, thank you. This is not a first-time home buyer only program. It is a owner occupied only program, and it is a single property ownership only program. Therefore, if the consumer has a property, residential real estate presently that they're selling, they would say yes. Obviously, your 1008, 1003 is with the expectation and understanding that they're selling that house as a part of the process of buying this new house. They can sell and buy, but they cannot buy and keep, and they cannot buy and sell later. They have to sell what they have and buy what they want. So hopefully that makes sense to you and you get it. And again, they sign and date. This is the truth in lending statement that I mentioned to you earlier, right? And it's just in reference to the DPA, so don't be alarmed, but this is where that recording fee, if there were one, would be reflected, and then it just subtracts the recording fee from the total DPA amount because it is down payment and closing cost assistance, and we don't look to break that down any more than the recording fee, and then the remaining balance is what's made available to title for DPA and closing cost assistance. And then again, they just sign. They do not alter this date. Don't alter this date for anything. So important. The reason is that date correlates with our need to disclose. And that date is based upon when you generate it. So even if the consumer says, well, the day is not the 24th, it's now the 28th, you go, it's not based on when you're signing it, it's based on when it was generated. And when it is generated is when it should be provided to the consumer. They can sign it anytime after that if they want to. But it's critical that that date is not altered. If you alter that date, your transaction request will be rejected. This is the Dodd-Frank certificate. Another key piece, right, which was a part of the financial reform, is that they have to indicate clearly that they have not been convicted within the last 10 years of any one of the following in connection with, and that's important, in connection with a mortgage or real estate. So they could have a felony, larceny, theft, fraud, or forgery that was not related to real estate or a mortgage and be fine. But if it were related to real estate or a mortgage, it would be unacceptable. Same thing is true for money laundering and tax evasion. Kind of bizarre that you could do that, but if it is real estate or mortgage related, it is a disqualifier. And if it is blank, it is a disqualifier because it must be clearly answered, and then they must sign and date the forms in order to do it. And then lastly is third-party authorization. And it will enter your information as originating lender, our information, obviously as a subsequent lender, and gives a supporting counseling agency, which is a program that generates the loan. The consumer will sign and date that information. I'm going to pause, take a look, and see if there's any questions that might be there that we haven't covered. Make sure we take a moment and address those. Okay, I see a question regarding the DPA. It is a 5-year silent second, and a very important piece about that, right? Back to making sure that you read and the consumer reads and comprehends what we sign as an acknowledgement. It is not gradually forgiven over time. It is all or nothing at the end of time. So if they receive $20,000 in assistance and they're in the property 4 years and 3/4 months, and they want to pay it off, they still owe $20,000. The only time that these loans are considered for a discount or a reduced payoff, if you will, is if the sale from the property does not generate sufficient proceeds to repay the DPA assistance. But if the sale has the money, the DPA assistance has to be repaid. I will say this as well in regards to these notes. We do allow for subordinations, though rates are so low now. I don't know that there's ever an opportunity to subordinate again in the future, but we do allow for rate and term subordinations, no cash outs. As I said, we don't discount the payoffs. And when some consumers have a real hardship, because sometimes we know this gets miscommunicated, they'll think, well, I can't sell in less than 5 years. That's not true. Yes, you can. You just have to repay it. And or they'll think I can't vacate in less than 5 years. That's not true either. Yes, you can. There's a procedure for requesting an occupancy waiver that may keep a consumer in compliance who needs to make the property a rental for a period of time. If they need to make it a rental beyond the allowable time, they may lose the forgiveness ability of the debt, but they still have the ability to say, I'd like to retain the property and somehow repay the debt, or possibly not have to repay the debt. That's there. I know those are long things into the future. You can always refer them back to the department in our loan servicing area. We'll speak to that for them, but I just wanted to mention that since I happen to see it right here. Let me look at a couple others. As I understand, the refinance cannot be done prior to 36 months. I just spoke to that. A refinance can be done provided it's a rate and term refinance, meets the terms and conditions of the program. To do it, we evaluate them case by case, but the process for the evaluation, just like the process for this reservation, is standardized. It either qualifies or it doesn't qualify. We can always share with you and or the consumer the eligibility criteria and where they miss or why they don't qualify for it. It's a 5-year lien, not a 3-year lien. Will the import work with the new DP, I couldn't even say it, DU 3.4? That's a great question. My thought is yes, but I'm going to ask you to email me a template of a file. We'll put one up in our portal. You can do that so that we can test it, because in our conversations, we did not think about the updates. And so I'm glad you mentioned that I've referenced 3.2 and you're saying it's at 3.4. So we will test that to make sure that we're fine. Anybody who wants to upload a 3.4 file for me, and I may have access to one myself as well, but just the same, we would greatly appreciate it because that'll give us an opportunity to test it while we still have a window of time. Can you clarify the homebuyer education certificate must be signed and dated? Yeah, Randy, we see some certificates, and it depends on where you get it, that has a line for the consumer signature. So we're just, obviously it's always got to have their name. That way you know who the certificate is for, but sometimes it has a line for their signature as well. And if it has a line for their signature, it needs to be signed and dated. If it does not have a line for the applicant's signature, then don't worry about that. How do we and where do we get the AMI information? That's a great question, and thank you. I'm going to pop and share with you this. Once our site, now you're back to my website, is published and you're hitting the link for our DPA program, you may recall from before, we will have links for the IDA. And so when you go to the IDA, this is Home Plus's link, and you can click their program information, and obviously you're working with them, you know what it is, right? This is showing you that if you're getting the Freddie Mac HFA Advantage under 80% AMI, and this is their zero option. This is where the product that you're selecting. And then when you're looking further down on their chart, right, this is the income limits for the various counties on that 80% you see in the center here and below. So if you're in Maricopa, it's 62,240. If you're in La Paz, it's 39,440. If you're in Mojave, it's 45,560, right? So it's varied. If you're in Pima, it's 54,720. That information is there. When you go to Pima County, and you'd have to ask them, I did not see their income limits. This is Pima County, the IDA, Pima Tucson IDA. And again, the Freddie Mac 80% AMI product here and zero down payment, they actually post their rate here. When you saw the Home Plus, their rate is posted inside the portal. So you need a credential for that. I don't have one, so I can't show it to you. For Tucson, Pima Tucson, you do not need a credential. You can see that here, but I didn't see where their income limit was posted or published locally out here. You can check with them about that. I was looking for the site and trying to find the information so that I could share it with you. But ultimately, remember, that's a first mortgage product question, Thelma. So you would be going to the IDA, whichever one you were participating with, in order to get clarification of that question and confirmation of that income. Even though one other piece I will mention to you, inside the LP findings, when you properly select the product, that it's an 80% AMI and below, and the county that you tell it, I'm told, will disclose to you inside those findings the max allowable income, right? Because the system needs to know if you enter an income over that limit. So there's some programming, and that's why I said it takes place from HUD on that as well, right? But you don't want to be finding out that late in the process when you're running your LP findings. So you can go to the IDA's website. As I said, you'd have to ask Pima Tucson about theirs because I didn't see it out there, but the Arizona IDA, it is published right here. And so you can see it. You just want to make sure you're in the right county and then you get the right income. So hopefully that took care of that for you. Let me just take a look at anything else. Apologies if you've already addressed this, but will there be a printable version of this for us, hard record versions on the website? Yeah, all of this data or documentation that I'm reviewing with you, the recording will be posted on the website, and we're just about an hour, so I'm gonna make sure that we wrap up soon here. So you can listen to that at any time you want to in the future. And then the documentation will be posted on the website as well, so that you can download that information at any time in the future that you want. This is the application job aid that'll be posted there so that you can see those highlights and walk through that process. This is the reservation checklist. That will be posted there. You see, that's just a one-page document, so you can ensure you have a solid understanding of the steps, and then you get that detailed information. The lender training information posted there again to the website. This is our program guide. Forgive me, I was saying training information. I jumped inside of it. So this is the 15-page program guide will be posted there. You can download that. It captures the revisions that were made in there, but I've shared with you the major changes you need to be mindful of. Gives you contact information for David Wilsey here at the department, which will be your primary point of contact regarding questions, concerns, where things go awry. We like to say, if the answer is in the guide, read the guide. If the guide doesn't provide the clear answer, then let us know and we'll correct it, kind of like the 3.2 versus the 3.4. And we definitely appreciate that, right? I mean, we all get better together. The documents, these docs, that sample pack is posted there for you as well, but obviously the actual documents are generated out of the system when you generate a case. That's important. And then this narrative, just a 3-page narrative of that step-by-step, will be posted there. So everything now, and I hope you caught that. I told you what I was going to tell you, then I told you, and now I told you what I told you. So you got it all, and you should be able to do it effectively without difficulty. I'm just going to do one more cursory review of any of the questions to see if I missed it. Total allocation is $6 million, $2 million a month, April through June, 2 will get you to the 6. If we get into the second and third month and discover we have additional available funds. And just to give you a sense of how that could be and where it comes from, right? You all know we started this a while ago, and a lot of people have bought properties with Save Our Home DPA or Pathway to Purchase, and some people we even helped just assist with Save Our Home mortgage retention, and then they've sold when the market skyrocketed. And so they made money and they repaid some of the assistance. And this is where these dollars are coming from, because we had expended all that we were awarded in terms of the grant. Have time to reinvest any of the returns. We thought this would be a great way to do it and to focus on still the targeted areas and the targeted households at 80% and below. So if one of those months end up with a little more than $2 million available, that will be posted on the site, as I said. So when you log in, you will see that. Looks like we got everything else. AUS finding number 9, you have completed sign and date. Are we supposed to sign those, or is it that an error? No, remember the findings, I am asking you to sign and date because you're just saying who owns them. Otherwise, I don't know who's responsible for that information. You don't know organizationally who's responsible for that information. One of the greatest benefits we can have for one another is accountability. So yes, we do like to see the findings signed and dated so we know who did that. Oftentimes that aligns with who the underwriter was. And so again, it's back to reading that step by step to make sure you get it all. Is there a specific box borrowers that need to be used? Example, what is there a specific browser that needs to be used? No, I'm in. We use Edge and I use Chrome, but everything is supposed to be usable, doable with all sites. Can we use employer provided or automated verification of employment, or are pay subs required? Good question. If it's a work number verification, right, and that's acceptable. But one of the real deals is think about what the information is telling me. If I'm on a new job and I don't have historic income information, then I'm going to need a combination of. If I'm on a job that's seasoned, then yeah, maybe that form is it. Think ultimately, what do you need to provide your underwriter? That's the same thing, because that's what we're trying to get a sense of. Don't give us a little bit of information only to give your underwriter a lot more information and have the two disagree. Give us what you would have to give your underwriter, and then hopefully the two should agree. But thank you for that question, Amanda. Can you confirm which zip codes? Yeah, we said they were the same ones, and we will post that targeted area again on the site. Did you say we need to sign the findings? Yep, that was secondary. Okay, I think I've gotten it all. I'm going to just take a quick look to see if there's any hands up, anything that I might have missed from anybody. Just want to give you a chance to be sure and get everything addressed. Nope, there is no hands up. Well, good. With that in mind, I want to say this sincerely. Thank you for your time, because it takes time to do anything, and it sometimes takes a little extra time to do anything well. So thank you for your time. Thank you for your support. If there's something we can do to be helpful to you in helping us deliver this assistance over that next 90-day period of time, don't hesitate to let us know, and have a great rest of your day.